You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it is Monday. It is 2 p.m. Central, 3 p.m. Eastern. Yep, it's time for the Crypto Rundown, the program here where we break down all the exciting developments on the other side of the fence, talking the volume, the volatility, the SKEW, the unusual activity, all that fun stuff. What's going on in the world of crypto? My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you're listening to this program right now. If you just subscribe to the Crypto Rundown, you're missing out on a whole lot of other great content, something else pretty much hitting you on the network every day, sometimes multiple times per day. We'll keep you informed, we'll keep you entertained, educated about what's going on in the world of all things derivatives out there. If you like futures options, we got you. If you like more of just your general plain old equity options, we got you covered. If you're basic, retail, professional, whatever your level is, we got you covered out there. So it's more than just crypto out there, even though we do like to hang our hats in the crypto realm as well. And of course, keep those questions coming. We do love to hear from you guys. And let's see who we're going to hear from today. It is time to roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat. Like the man said, this is the portion of the show we welcome on guests from throughout the world of crypto and derivatives and beyond and proceed to pick their brains. For the benefit of you, the listener, today's guest is a newcomer to the program and indeed to the network. He is IMRAN Khan, a partner over there at Volt Capital. IMRAN, welcome to the Crypto Rundown program.
Thank you for having me.
And IMRAN, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the financial and indeed crypto space, as well as what it is you guys do over there at Volt Capital.
Yeah, absolutely. Quick background on myself. After graduating out of Northwestern, I had started a startup in the ad tech business, grew it out to about 40 employees, ended up getting acquired 3 years later. And since then, I was always fond of looking at emerging technologies and trying to understand ways where we could build products in a way that can attract newer retail users. So since then, I spent about 8 years at Microsoft, where I ended up being one of the first evangelists to bring up crypto, along with a set of group of people that were also excited about what the implications are for the technology. I spent 4 years building product closely with our cloud infrastructure team at Azure. And then the last 4 years I spent at Microsoft Ventures, where I helped lead and create if you think about like a thesis at that time for crypto and how it aligned with the core infrastructure of what Microsoft provided. And since then, I saw a lot of activity. And so I'm talking from 2012, 2013 till now. So the last 4 years, I saw an intense amount of activity happening in Silicon Valley, New York, and other parts globally. And so I decided to leave a larger corporate venture and started in one. I want to dig deeper into what startups are doing today. And to my amusement, there was a lot happening on the DeFi space, which is called decentralized finance, along with infrastructure, where you could see some of the core products that are available for institutional investors, along with retail products that are available for end user customers. And so I ended up joining Bold Capital. Bold Capital is a venture-focused fund that invests pre-seed, and pre-seed primarily means very early, sometimes pre-product, where there's a bunch of entrepreneurs that have a really good idea. They need to get funded. We've been around for about 2 years. It's a arm of Token Daily, which is kind of our research and news platform. We've invested in about 6 companies so far. And directionally, we have 3 areas that we're super excited about. One is DeFi, which is what I mentioned earlier. Second is infrastructure. And the final is anything that touches the end user, so accessibility.
Yeah, I like to pick the brains of our guests a little bit. Usually they come from the traditional financial world. You came from, like you mentioned, the ad tech world. But everyone has that moment, that inflection point where they said, there's more maybe to this crypto thing than perhaps I first assumed. It sounds like you were kind of early on that trend. What was it that lured you to the dark side of crypto and away from things like ad tech?
Yeah, I'd say that, obviously TechCrunch and a bunch of these other publications were talking about Bitcoin and Ethereum early on. But one, if I had to pinpoint one area, it's Mark Andreessen's paper that he published via New York Times, where he talked about why Bitcoin is going to matter a lot in the future. This was around 2013, 2014. And so I had a chance to actually chat with them. And after a quick discussion, I realized Bitcoin was going to be the future. And so it kind of went deep since then.
There you go. Mark Andreessen, he lured you to the dark side. So he's to blame for bringing you over. Everyone's got a different origin story. I haven't heard that one yet. Let's move on to what you guys are investing in. Like you said, you guys are investing in often pre-seed type ventures out there to try to get the ball rolling on the crypto space. Let's start. You mentioned, we'll get to all the DeFi stuff in a second because I know that's very hot and heavy. In fact, we have some listener questions about all that. You mentioned kind of the infrastructure as well. That's an area that fascinates me. You've seen a lot of ebb and flow on the infrastructure side of the space in terms of the plumbing, the actual underpinnings of the space, of course, on the mining side and how these actual assets are delivered and acquired, and sometimes the economics therein. There's a lot to parse there. What is it that really fascinates you guys on the infrastructure side of the crypto space right now?
There's a lot of inherent features that could ultimately benefit customers in the long run. So one thing that everyone talks about is privacy. As you know, Facebook, Google, and all of the other larger conglomerates, they have a very deep understanding of who you are as a user, but users don't really like that sometimes. And so there is a company called Fortmatic, which is now called Magic Labs. And essentially, and this is just a quick example of what they do, is they enable anyone any developer to create an onboarding or an onboarding solution. So let's just say if you have an app, you sign on. That sign-on process is obfuscated away in the sense of data. So a lot of the data that's being stored would be ultimately stored on the blockchain. And the great thing about this data availability is that the data would only be used for that customer and that particular application. Whereas if you were to sign in with Google, every app that you sign in, there's data trails that go all around, and that just gives Google a better idea of who you are as a user. Whereas with Fortmatic, you could sign on with that specific application, and that application, any data that comes out of it would be stored on a blockchain that's encrypted, and no one will really know what you're doing, which is ultimately what users want in the long run. So infrastructure, that's the type of infrastructure project that we invested in. And there's others too, like I don't know if you've heard of like mining or FPGA mining, which is also becoming very prominent, which is essentially if you want to kind of think about where it sits in the mining realm, there's kind of 3 ways that you can mine today. You have ASICs, you have GPUs, and then FPGAs. FPGAs essentially are interesting because they're, I'd say, 5x faster than GPUs, 5 to 10x faster than GPUs, and almost as efficient as ASICs. And they're about the same cost as a GPU, which is super interesting. And so anyone can purchase one of these hardware units, and they can mine as almost as efficient as ASIC. And so we're starting to see this area being cannibalized, where a lot of GPUs are starting to move off the network, and FPGAs are taking over.
You mentioned the mining. That's obviously an interesting area for a lot of our listeners out there. That's how a lot of them got lured to the dark side of crypto themselves. We've seen the ebb and flow of whether it's worthwhile or not. Obviously, we're on the other side now of the Bitcoin halving, which is intended to drive down interest in mining out there to try to limit the supply out there. Are you still seeing a lot of interest, whether it's on the startup side or perhaps from you guys on the investing side, in mining overall? Is that still the hot area, or has it maybe shifted to other areas of the crypto space?
Yeah, mining is such a capital-intensive business that a lot of investors are kind of, they're not inclined to making investments in that area. But there's one particular startup that's actually taking it a step further. They're out of Texas. They're called Layer 1, and they have an interesting way of mining where you could think of it as a vertical-based business where they actually take energy from oil fumes, and that powers their mining rigs. And then they're able to kind of mine Bitcoin. The super interesting thing here that they've done is they're creating so much energy out of this kind of oil field that they're actually selling the energy back to its grid that they're operating out of. And they're actually making a ton of money that way as well. And so the cost of Bitcoin has gone substantially lower because they're using this kind of infrastructure to do that. And obviously you have, a bunch of mining operations in China where they're using hydro-based energy incubations where they're able to kind of take energy from all of the hydro factories that they have available there, and they're able to kind of mine that way as well. But I'd say if I had to put two words to it, it's highly commoditized and it's very capital intensive. So I think people are starting to move away from this area.
I love that one of using the nat gas from the oil wells to power their Bitcoin. That's very much merging of an old world economy and the new economy, which I think is kind of fascinating. Speaking of the new economy, let's get into the hot area everyone's kind of all the Twitter about these days, which is this whole DeFi movement. In fact, maybe before we even get to that, because I know you're pretty hot on that, we have a listener question. I'm going to cheat and bump them up from our listener questions to now because it ties into this as well. Nicholas wants to know, can you please explain this whole DeFi movement? How does it differ from regular crypto? We touched on this on the program in the past. We had the guys from Genesis Volatility on the show not too long ago, and we kind of got into the DeFi movement a little bit there. But it sounds like, Imran, our audience still has some questions about what the heck's going on over there. So maybe let's start there. Let's start 10,000 feet. Explain to them from your perspective what this whole DeFi movement is about. Then we can get into the alliance and all the other hot stuff that is popping off in your neck of the woods here.
Yeah, if you were to think about decentralized finance is essentially if you think about it from a high level, it's a protocol that enables transactions to happen without trusting any intermediary. That's essentially what it is. And so I can give you a quick example that we use, what we use today. For the internet, as an example, is we connect through something called TCP/IP. And essentially, it's a protocol that allows people to connect to servers. And it does it in a very trustless way where you don't have anyone in the middle that's actually routing your connections to these servers. So if there was a world where there was a conglomerate that was actually connecting you to a website, that would be what crypto or decentralized finance is solving. So being able to use any financial application without having to trust an entity or a party, you're able to do it trustlessly without having to worry about anyone in the middle that's taking advantage of what you're doing or what the other side is doing. And the great thing about these protocols, similar to TCP/IP, is the fact that you could trust what's happening on the other side. The problem that we're seeing today in centralized finance is rehypothecation, which is essentially if I was to collateralize my assets with an individual where I can borrow against that collateral, we don't know what's happening on the other side. And that's one of the reasons why the financial meltdown happened in 2008 was the fact that, a lot of what was happening in centralized finance, as we call it in DeFi, is that there's a lot of nuances where people are doing things where there isn't a ledger that is able to kind of understand what's happening with the assets you're collateralizing or the assets that you're about to borrow against. And so that's what I think the beauty is about decentralized finance, is the fact that you know what's happening across the board. You could analyze it day to day, and then you could trust that all of the folks that are part of this kind of ecosystem are all trusting an algorithm versus having to trust a single entity.
I love it. A lot to unpack there as well. Of course, I'd mentioned before here on the program, we're coming at you from Chicago here, and Chicago very much the heart of the crypto trading side of the space. A lot of firms obviously here have expertise in the derivatives world, applying that to the crypto space. Now that is coalescing around this DeFi movement with this newly formed DeFi Alliance that I know, IMRAN, you guys are a part of. That includes TD Ameritrade, Cumberland, CMT Digital, DB Trading, Jump Capital, you guys over there at Volt, and a number of other firms. I know this is a big initiative you guys are pretty excited about, IMRAN. Why don't you break it down for our audience? What is this DeFi Alliance? What is the goal of this organization? What are you guys trying to do?
Well, if you look at DeFi, decentralized finance started around 2013, 2014 with just an idea. And it was really ultimately started by a protocol called MakerDAO, which is essentially acts as a credit facility. And what's happened since then is that if you look at the total value or total collateralized value in decentralized finance today versus $0 in 2014, you'd be surprised. It's $1.63 billion. So it's not a number that you could actually just say, you know what, it's not going to happen. It's going to happen, and it's going to happen in very interesting ways. And so as this total value locked has been growing month over month, a lot of the larger trading firms are starting to find interesting opportunities to generate alpha. Or they see it, but they don't want to start to dip their toes into it today. But they want to get close to it. And I'd say over the 3 years that I've been in venture, I'm actually based out of Chicago. My entire team's out of San Francisco. I'd say over the course of 3-4 years, I've been the liaison for all of these DeFi companies navigating into Chicago and its trading firms. Obviously, DeFi needs to have a robust infrastructure of traders, or ecosystem of traders and trading firms that are able to continue to make the markets more efficient. And the beauty about this is that there's a lot of overlap in terms of what people are doing today on the traditional side over what they're doing on the DeFi side. And so essentially what we did was created a platform 3 months ago where I chatted with DRW, Jump Trading, CMT Digital, and we talked about, like, could we make it just much more easier for these startups to navigate Chicago's trading firms, the trading ecosystem? And so we honestly, I'll be very blunt about this. We thought that, just by putting up a website and, what we were thinking about doing was just devoting 2 hours a month to just helping some of these startups grow and learn the trading ecosystem. That was kind of our core plan to begin with. Once we launched, we had over 200 applications come in globally from DeFi companies wanting to, either learn about the Chicago trading ecosystem and or wanting to be a part of, or being able to connect with any of the trading firms that are there, which is interesting, very interesting. So within 2 weeks, we ended up creating a 6-week fellowship program that will help guide all of these DeFi startups to understanding the ecosystem today, how it works in Chicago, understanding incentives, creating incentives, building better products that will attract traders, along with being able to have a 1-week residency program where they actually sit inside, let's say, Jump Trading or DB Trading, and actually work side by side by some of these traders and understand how they think. There's a big disconnect in terms of what people are building Silicon Valley in New York and Berlin and other places and what's actually happening on the trading floor. And so this platform will enable a connection between the two worlds. And eventually, I think we're going to see a massive ecosystem that's going to be built. And we want to bring this to Chicago.
Yeah, that's fascinating. That's pretty much the genesis of this show. That's why we launched it, was we were seeing that unfold here in Chicago. And it was fascinating to me and to our team here watching, this latent derivatives infrastructure, which is deeper here than anywhere else on the planet and how it engaged with this new asset class of crypto. People bringing, a traditional derivatives, risk management, risk modeling type mindset to this new world, and then coming into contact with, sometimes colliding, sometimes working together with people coming from a more tech central background who look at crypto as more of a technology product and indeed a movement. There's a reason why they're involved with it. And now you have people coming with a much more, shall we say, pragmatic, markets-based viewpoint. And watching these worlds interact and somewhat collide, Imran, has been certainly fascinating to me. I'm glad to see that there's an organization out there to try to foster this now, because you're right, there needs to be a lot of bridge building and hand-holding between these two worlds, because on their own, they operate in very different orbits, but now they've come together in some interesting ways. It sounds like you share my viewpoint, Imran, that's the most fascinating area of crypto right now, is that intersection between the two worlds and some of the interesting products and developments that are going to come out of it.
Absolutely. So within this program, we actually chose our first cohort. So you could think of this as it's actually turning into an accelerator, to be quite frank. And so we have 7 startups that have already went through the program. Actually, this is their last week. The 7 cohort members are 0x, DYDX, Kyber Network, IDEX, Open, Set Protocol, and Synthetics. And they're probably the top 10 startups that are building in the DeFi space today. And there's a lot of learnings, a lot to unpack. And we're about to launch our second cohort in July. And so if you go to chicagodefi.org, you can apply and you could learn more about how you can be a part of the second cohort.
And how has obviously all the madness that has unfolded in the world over the past few months, how has that made it more challenging? Because obviously you can't really send someone in to a trading company anymore and have them sit side by side with a trader. But on the flip side, they can all exist and interact virtually. So maybe has that ironically made it easier here, Imran, to facilitate some of this going forward?
Yeah, most of it's virtual. Actually, all of it's virtual for the first cohort, and I would assume the second and third would probably be still virtual. We are kind of looking at what's happening on the macro side to see if we could enable like a 1 week, residency program with some of these trading firms. But obviously, it's very nuanced based on what's happened in the space. But eventually, we will, just based on macro conditions, we will have a residency program, because what we want also is that a lot of what's happening in the DeFi side, we want it to be, we want a portion of this being built in Chicago, because I think what Chicago has built over the past century, there's a lot, and you can't replicate that. And so we want a lot of this to tie back into Chicago, and hopefully grow the ecosystem for the next generation of finance.
I think that makes a lot of sense. I've been part of a lot of organizations here over the years. I've started a few myself, including our Options Alliance, where our point was really to grow that ecosystem that has developed here in Chicago, this derivatives expertise. So you're right, doesn't exist to this extent anywhere else. And there were a lot of other initiatives going on in Chicago that were all very interesting, trying to create Silicon Prairie and all these things. But there already is a Silicon Valley that exists somewhere else. You're never going to really replicate that. But what Chicago has here is unique, and it is very much centralized and focused around this derivatives expertise. So I think something that taps into that, Imran, and really tries to take that to the next level and also introduce that to a new group, a new era of people really looking to learn about this space. I think there's a lot of interesting area to explore there, and mine, pun intended there, Imran.
Yeah. I think we're in this special time right now where like the whole world, very similar to 2008, 2009, where we don't know what's going to happen tomorrow, but we do know from if you look at the area of progress from 2008, 2009 to where we are, now, there has been some incredible companies that have been founded, Uber, Pinterest, Lyft. And I do think we're in that similar inflection point. And this time around, it's going to be crypto assets, and not just crypto in terms of trading, but what the actual blockchain infrastructure could actually bring to the markets. So there are many companies that are starting to build in that same vein. And we're going to start to see some very interesting innovations happening. If you look at what Facebook has done with its Libra blockchain, that's validation in terms of what's happening there. Samsung has a very similar approach, Microsoft, Google. And so you're starting to see that a lot of larger tech companies are starting to pay attention to this space. And that's why taking advantage of what's Chicago built and really leveraging that to really infuse what's going to happen in the next 10 years. We're really excited about venture, startups, and being in the forefront of that.
Well, Imran, I appreciate you giving us some insight into what's going on, particularly here locally in the Chicago DeFi Alliance. If our listeners are intrigued, they want to learn more about the Alliance, or maybe want to check out your various ventures, pun intended, over there on Twitter. Maybe they just want to learn more about Volt Capital. Where should they go? What should they do, Imran?
Yeah, they can go to volt.capital, which is our website. You could also reach me at IMRAN, IMRAN, at volt.capital.
There you go. Well, thank you for joining us. Check them out over there at Volt Capital. You can also find them on Twitter over there, Token Daily, a lot of different outlets. You can reach out to them. And Imran, this sounds very fascinating, this DeFi Alliance. I look forward to having you back on the program in the near future so we can hear more about what the latest is in the world of all things DeFi, sir.
Likewise. Thank you so much for having me on.
All right, and now we have to keep on rolling with the rest of the show. It is time to head into the Bitcoin Breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we do exactly that. We break down what's going on in the world's leading crypto and digital asset. Yep, it's time to talk all things Bitcoin. Talk the spot, the futures, the options, all sorts of fun stuff, the vol, the volume, the SKEW. Let's get into it. Coming into halfway through the show or so, we're seeing Bitcoin giving back a little bit of its gains it's had of late. Last week at the end of the show, it was threatening 9,600. Coming into today's show, we're shy of that 9,200 level, right around 91.5. Puts it down about 440 odd handles or so since last show. So not exactly a strong week for the bulls. Coming into showtime here, we're seeing that realized vol kind of staying right where it is, coming in a little bit. It was about 56% last show. It's down about 52% this week, so not a huge change. It's maintaining this level of vol where it is right now. 1 year realized right about the same, down slightly, down to about 85%, but still 1 year realized volatility of 85%, that's nothing to sneeze at out there. We were talking not too long ago in our TWIFO program about 3% in the 10 years, so 85% is nothing to look askance at. 30-day implied, that's of course the level of volatility that's actually being priced into the options. That's down slightly as well. It's down to about 53%. It was about 60% on the show last week. So vol net coming in a little bit. That may surprise some of our equity options traders who traditionally associate a sell-off with an increase in vol, but this has been a generally ordered sell-off for the most part. And again, SKEW is a different beast when you get beyond things like the SPY and Apple options and things like that. Speaking of the SKEW, we're seeing that SKEW tick up here this week, up to about 13%. It was a little bit shy of 8% of the show last week, about 7.6%. That call to put also ticking up. It's almost exactly 50-50 now. It's 49% calls, 51% puts. So pretty much pick them, at least net from an OI perspective. Let's look at the volume out here on the leading venues. Let's start with Deribit out here. A decent volume week out here on Deribit, actually. We tied, remember the high for their last few months was on June 2nd at about 169 million worth of notional. Actually tied that this week. Back on, what was it? Looks like middle of the week last week on Wednesday. So 169 million on the 2nd, and again last week. That's kind of the highs out there. Other days were still pretty high, about 94 million or less out there, which is still pretty strong out there from an overall Deribit volume perspective. Looks like the big prints on the week. Looks like downside puts were where the action was. 8,000 puts in July, doing a couple of 500 lots here on the 26th. Also saw 7,000 puts doing about 500 contracts. That was on the 26th. Also saw the 9,000 puts doing about 500. Those are in 250 lots. Those were all done back on the 26th when Bitcoin was around 91.60 to about 90.71. So they went up throughout the day at a different range out there. So someone putting on maybe a bit of a put strip, maybe rolling down. Either way, seems to be downside was where the action was over the course of the past week. As for today, not a ton lighting up the tape out there on Deribit today. It seems like the big prints are on the call side, 11,500 calls, doing a whopping about 200 contracts out there. So again, kind of a light day out there. Similar paper for the 14,000 calls. So upside calls in August are the trade du jour on Deribit, but pretty light volume overall. Decent volume, though, when you get on out to CME. CME actually doing enough contracts now where you can actually quantify them as opposed to talking about ridiculous things like notional volume. We saw a pretty decent week last week. 371 options going up on Friday. Remember, that's a 5X contract now, so that's getting pretty beefy. 125 on Thursday. That was the light day of the week. The big day was Wednesday. 403 contracts on the tape. 133 on Tuesday and 320 on Monday. So all of you who've been waiting for those CME options to start perking up and come to life, that seems to be the case out there right now. We'll get to the OI in a second, though, because it's a big change from last week. You might hear that and say, oh, wait a minute. No one's interested in Bitcoin options anymore because the OI fell off a cliff. It was closing in on $2 billion worth of notional outstanding last week on the show. This week, it's far less. We're seeing CME down to about 145 million. Deribit still number one, but well shy. They were well north of $1 billion. Remember, they're about 1.1 billion, if not higher. Now down to 727 million. Ledger, actually OKEX number three at 49 million, and Ledger X about 36 million, number four. CME had gotten up to I think around 300 million. They're down to about half of that now. What happened? Well, of course, June rolled off the board. We've been saying for a while here that June, it's these quarterly expiration cycles where people like to aggregate in the crypto space. For whatever reason, that's the case. And once June rolls off the board, it took a lot of that open interest with it. So if you look at this graph here, and you can see it for yourselves, our friends over there at SKEW.com have it all queued up for you. You can check it out for yourselves. Open interest pretty much falling off a cliff, but that just reflects June going away. And now we'll see how long it takes for September to pick it up. Right now, July is where the lion's share of the open interest is, but it's a pale shadow. Last show, June had about 114,000 contracts open. That's all gone now, hence that big OI shift. July is now leading the dance, but it's only got about 40,000 contracts open as of the start of the show. So it's a pale shadow of almost a third of what we're seeing out there, or what we did see in June, just as of last show. September is kind of light, still only about 22,000 contracts, but it's got time. I'm sure as we get closer to expiration out there, it'll have numbers similar to what we saw in June, if not more. Looking at the net OI out there, again, this is the truncated number now. We're seeing Deribit, though, coming off down to about 76%. CME back down. It was up to about 25% of the OI. Now it's down to about 15%. We got OKEX at 5%, Ledger X at 4%, and BAKKT still hovering at that pretty much de minimis level out there. Strikes, if you're wondering where the action is, it's still, even though a lot of it came off the board with June, it still is aggregated around the 11,000 strike with about 13,000 contracts open over there. The next hottest is about 10,000 strike with about 8,600 contracts there. So a lot of it came off the board, but still 11,000 and 10,000 leading the dance. Let's see, the 7,000 strike has really fallen off. It's only down to about 3,400 contracts. Obviously, a lot of that was aggregated out there in June. Let's move out to the futures over there on CME land, see how they did. A pretty light volume week last week. The busiest day was about 11,600 on Wednesday. The rest of the week was far below it. Today, about 6,000 contracts coming into the start of the show. Our old friend, the BAKKT volume bot, let's see what he has to say about the BAKKT futures. A decent week, actually. Total volume about 69 million. That's up 31%. And the max open interest is up to about almost 8 million. That puts it up, I should say, down 36%. So volume growing, OI declining, which is kind of interesting as we look here to what's going on. Let's move on out now to the other side of the crypto space. Talked DeFi earlier, now we got into Bitcoin. Let's get on out to the other side where we explore the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, let's do it. Let's explore the altcoin universe. Let's start off with the top 10. There's been some evolution out there of late, which makes it kind of interesting to watch. Number 10 now is EOS at about 2.2 billion. Number 9, Crypto.com coin. We talked about that making its way into the top 10 last week. Now it's at about 2.2, a little bit north of it, 2.22, just edging out EOS. Remember, take these overall market caps with a huge grain of salt. There's some questions about their veracity, but the rankings, I think, hold true. Number 8, Binance Coin, about 2.4 billion. Number 7, Litecoin, 2.7 billion. Number 6, Bitcoin SV at about 2.9 billion. Then we got Bitcoin Cash, number 5, 4.1. Then we jump up to number 4, XRP, 7.8 billion. Numero Trace here, Tether, has usurped XRP and is holding firm there at 9.2 billion. Then we jump up again to number 2, ETH, 25.3 billion. And number 1, of course, Bitcoin at about 170 billion out there. Let's go back now to the number 2 overall crypto market out there. Let's talk ETH. Down a fair amount from last show. It was right around 244, almost 245 at the end of last show. Now coming into this show, it's down about almost 18 handles from that. It's at about a 226 and change out there. Looking at the vol landscape out here, most of the vol in ETH this week is kind of unched. We're seeing 30-day realized, which is about 66%. That's pretty much exactly what it was this time last show. The 1-year realized 104%. 30-day implied, though, which is what the market's actually pricing in, that has come in. That's down to about 50%. In fact, our friends over there in Genesis Volatility were kind of a little bit surprised at how low the vol is getting out there in ETH land. Let's see where the open interest is lining up. And the volume, a decent volume week here for ETH options over there on Deribit. The ADV is now up to about 11 million, which is a little bit higher than it was. It was about 10.5 million on the show last week. The biggest spike we saw was on the 26th, about 21 million worth of notional going up. On the 27th, we saw 16 million today. Kind of light volume coming into the show. Same deal on the OI front. OI down quite a bit because ETH, same thing as in Bitcoin. Most of the OI was aggregated in June. So it dropped from about 150 million down to about 120 million. The Genesis folks commenting on that as well. They saw the June 26th expiration had about 43% of the OI they saw out there in ETH at that point. So with the 220 and 240 strikes being very popular, of course, all that obviously going off the board as of expiration last week. So, yeah, about 119 million worth of notional out there on Deribit. Worth noting about 6 million on OKEX. So they're starting to fight their way into the top spot there. Still got a bit of a ways to go, but OKEX making a bit of a noise out there in the ETH space. Let's move on out to XRP. Down a bit from last show. You know, people were wondering if it was going to rally, break the 20-cent handle. It was at almost 19 cents as of the end of our last show. Now it's down to about 17.7 on this show. So again, another good week for the bulls and pretty much most of the major cryptocurrencies out here. Bitcoin Cash, same deal, down nearly 19 handles, 18.7 from last week, and Bitcoin SV down about 18.5 handles from this time last week. Now let's keep on rolling into our final segment. It is time to answer your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody. Welcome to your questions. You guys ask us a lot of questions. Sometimes we turn the tables on you guys, though, and ask you some questions. This was a fun one we had on our network, which I think is probably expiring as we speak now on our Twitter there. You can find us over there at Options if you haven't followed us already. We had an interesting debate on our Volatility Views program between some Philly guys and some Chicago guys about what's the better delicious local delicacy, Italian beef from Chicago or the Philly cheesesteak. Little fun weekend diversion for you guys. Seems like Philly cheesesteak, as of the start of the show, which pretty much this poll is just about done. Blowing the doors off, about 2/3 exactly, actually, for the Philly cheesesteak versus 1/3 for the Chicago Italian beef. I can probably get behind that. I think part of that is the Philly cheesesteak is known nationwide. I think until you come to Chicago, no one's really ever heard of an Italian beef. And Portillo's doesn't really exist, except for a couple places in California outside of Chicago. So maybe name recognition hurting the Italian beef there a little bit. If you have thoughts, let us know. You missed the poll maybe, but write in with your own local delicacies you want us to debate here on the show. All right, coming up here from your actual questions. This one coming in from Scott Somer. He was listening to the show last week. We had the guys, Koppel and the team over there from Cross Tower on the hot seat with us last week. They tweeted out that the percent of the population that trusts cryptocurrencies and blockchain, they said the highest was China with 81%, Thailand 77%, Indonesia also at 77%, and India at 73%. The lowest was at the UK, 30%, Canada 28%, and Germany 25%. They don't list the US on there. Scott wanted to know, does this primarily act as a bridge to the US dollar for the typical Asian to access the US financial markets without the government capital controls, right? Yeah, there certainly is a lot of that. If you're coming in from a lot of these centrally planned and controlled economies in Asia, you may want access to external sources of capital that aren't as tightly regulated. And we certainly have seen a lot of correlation, certainly with Bitcoin, to when there's crackdowns over there in China, people wanting to move capital out of it, and so using Bitcoin as a means to do that. So that could certainly be in areas where the financial system is a little bit less established and maybe a little more highly controlled, are certainly areas where they might have a little bit more positive outlook on all things crypto. Obviously, here in the U.S., we have a lot of other options, pun intended. And so it makes it a little bit harder for some folks to grok on to the new asset classes, crypto, DeFi, all that cool stuff. So it takes a little bit longer here. Obviously, our regulators are a little bit slower to move here as well. But I think you're onto something there, Scott. That is usually a big driver for a lot of activity, particularly coming out of China. Let's move on to Nicholas. We already talked about Nicholas. You wanted to know about the DeFi. Hopefully you enjoyed hearing your question answered here, Nicholas. DeFi, the hot area over there in all things crypto. I got a feeling we'll be talking about that again on the show in the near future. All right, let's see. Let's wrap it up here with Bean1022 wants to know, did you see PayPal and Venmo may start direct sales of crypto? Do you think this will make crypto more mainstream? He links to an article, I believe this is from CoinDesk, citing that what they term fintech giant PayPal plans to roll out direct sales of cryptocurrencies to its 325 million users. Now you can use it as an alternative means for withdrawing funds. But this will be the first time you can actually go out and do some direct sales with crypto. Yeah, I think this is all these developments are great. Anything that makes crypto more practicable, more applicable for people's lives, makes it easier for these products to gain traction, to gain recognition, to gain mindshare, and in turn lead to more interest and more volume in the trading side of these products. Because if you're actually out there transacting with them on a day-to-day basis, people will have more knowledge of them. They'll have more understanding of what the different rates are between the different assets out there, and of course with the dollar, and they could probably want to trade those. Think about when you're traveling overseas, and all of a sudden people get very interested in exchange rates. Something similar here with people actually being able to transact now with crypto on PayPal, leading them to have more interest in the underlying asset, which of course leads to more volume, more volatility, all the good stuff that we like to see here in these products that we're parsing every day. So yes, short answer to your question here, Bean1022. I like that handle. Yes, I think that is a good thing for the crypto markets going forward. All right, everybody. Unfortunately, that music means we've come to the end of another epic journey through the world of all things crypto and indeed derivatives. I want to thank our guest there on the hot seat, IMRAN Khan. Check them out over there at Volt Capital. If you want to learn more, they're on Twitter there as well. Just go to Token Daily. That's one of their main outlets as well for a lot of insight into all things DeFi and everything else cooking over there. And on behalf of Imran and myself, I thank all of you out there for downloading, streaming, subscribing, for sending in questions, for listening live, for all the good stuff that you do. If you like what you hear, remember, keep those reviews coming. It helps new folks continue to discover this program. And it is, quite frankly, the only game of its ilk in town. So if you like it, help people continue to discover this program. We'd like to see all the new earlobes hitting the show every week. And we'll see you back here next week for more of the Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.